Well, you thought you heard everything about silver, but there's always more, and there's always interrelated markets that affect the price of silver. But in a lot of ways, I'm not going to hit a lot of fine-tuned details because I think you'll lose sight of what's going on. But I think I have a pretty good picture of it. I'm just going by my own little devil mind. This is the Silver Slayer, and kind of a very good depiction because silver actually in reality is a high-risk asset. It can get ahead of itself, and people can get trapped. Like one thing I say is the guys that are pumping and dumping this stuff, they're pros. They're pros, and there's a lot of people that jump on board the wagon and help them out in a lot of ways with good intentions. But they're played like idiots a lot of times because when silver starts taking off on its own, and it's a very good asset, very long term, don't get me wrong, but it always has this, if you look all the way back, it always has this type of thing where it gets way ahead of itself and then it takes a dump and it sits flat for a long time, which is exactly what's going on. So the silver pump and dumper is going to get in there really hard when it starts going up, and it's maybe going to be halfway up the curve. They're going to get all the chumps to dump in it at near the next peak, and it's going to dump again and have a 50% retracement, you know, this 61.8 or whatever, and the same pattern is going to continue again. So I want people to be aware. Now, there's something else I want to mention. Well, before I go over that, I just want to point out a couple things with Mark Farber again. He's 25% or more invested in gold. He has physical gold. I said this before, but I'm going to say it real fast. He uses physical gold because he doesn't trust the ETFs. Smart guy, right? But if he likes silver better, but he'd have a storage problem. He figured I think he's a multi-billionaire, so he's got a hell of a lot of gold, right? That's a lot of physical gold. So he'd have, 60 times the amount of silver to store. But the other thing is he would take all the silver off the market if he actually somebody that big went and invested in it, and they clobber him. You know that. They would clobber him. They wouldn't allow him to do that anyway. So, I mean, he's being nice when he's saying he has storage problems. He knows the deal. He wouldn't be able to do that. But he thinks silver's going to go up faster than gold the next time around. I think that's pretty much a common sense observation. Gold starts taking off, silver takes off. And I was talking about the war with Iran coming up, oil going up, gold will go up, and silver will take off and all that garbage. Usually when oil's in a very hard bull market, silver's in a hard bull market, right? Now I want to get on to something else called the death cross. I don't have a chart in front of me, but you really don't need to know the chart. It's really what happens is when the 50-day moving average crosses the 200-day moving average. In other words, the 50-day moving average is declining faster than the 200-day moving average. That's the death cross. That's showing up on the S&P. And if you look back, in other words, the S&P might crash pretty soon, but I don't think it'll be allowed to crash. We got Ben Bernanke. That's why I keep thinking, it's like you're holding your breath waiting for water to boil, but I think QE's around the corner here, because if there was a death crash in the S&P because of the death cross coming up, which we have signs of that, and that's what happened before when there was other major crashes in the markets. So in 2008 that happened too. So, and also the metals and the commodities got creamed before the regular stocks, and that's kind of looking like what's going on right now. So I think that's a pretty good bet. Now the only commodity out there that's actually doing very well is agriculture. Now this is a chart going back to February of 2012 on soybeans. Now I want to point out some of the people that give financial advice, because they are giving financial advice. And I guess I am too, but I'm giving very common sense financial advice. Like I think it's a very high risk maneuver to put all your money into metals, or most of your money into metals. I would never say put all your monies into metals, period. I got most of it into physical metals. That's pretty crazy. That's a high risk maneuver, and I know it is. But That's what I'm doing. But I recognize that as a high risk maneuver. I understand it is. Actually, I think it's probably a safety, but that's my own opinion. But I don't have everything in one thing. As a matter of fact, I have some in agriculture and things like that, and actually I have the physical food storage, fuel storage, and all this other garbage. If the end of the world happens, I'll be sitting pretty while everybody else is dying and stuff, no problem, right? Theoretically. But anyway, this is a chart of soybeans, and what I'm getting at is the myopic attitude of some of these silver pump and dumpers. Like, silver's the only investment out there. Silver's not the only investment out there. If I would have told on my channel that I was going to go dump into soybeans right when silver was around $35 to $37 an ounce at the end of February 2012, I was going to just sell all my silver and buy soybeans. People would have said, you're a trader, you're nuts. Now, if I had 20/20 vision going forward, I probably would have done something like this, but I don't. Well, this is the demand, this is the curve that soybeans went up. It went up like a good 60%. And some days, if you look on these intraday charts, it looks like it went vertical. And that's due to the drought that happened in the United States. So this would have been a stellar move. Now look what happened to silver during that same period. Down, right? Down. It's like I personally prefer silver over pretty much everything else. I like palladium too. I would not suggest to the average person to go into palladium unless you got so much silver you have a problem, with it and stuff, because I don't know. It's probably smart to get some palladium, but I would lean more towards silver. I just like palladium better than gold. And because right now, because it's low. You try to buy it low. Right now it's pretty low, so you got a pretty good bet. I mean, palladium's like under $600, gold's like close to $1,600. That's a pretty big spread. So eventually palladium's going to catch up to gold even. So if you got patience and you got a long-term bet, that's probably a good bet. But that's a longer-term bet. But I want to point out that a lot of times people on these silver channels aren't giving good advice, and they're just one-track mind, only silver, 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 and it's not the only thing out there. But not everything that's going on in the markets is a big conspiracy and all that type of stuff. And it's a lot of times you'll notice every single commodity went down. The only ones that are going up is the agricultural commodities, and that's because of the drought that's affected 62% of the United States. Now, another thing that's coming up, there's going to be another big scare in the euro. Italy doesn't like the euro. Actually, I think most people all over Europe don't like the euro, but Italy don't like it at all. They got kind of like an underground economy over there too, and they never liked the euro. Now, you might see calls for Italy to get out of the euro. Now, if they get out of the euro, they're the third biggest economy in Europe. I know, like, most of the industry in Italy is actually probably more concentrated up near France and Switzerland and Austria. And I know there's different opinions about Italy and stuff. But Italy still is pretty strong powerhouse in Europe. It's like, it's Germany, France, and Italy. So if Italy exited the euro, it would be the end of it. But what I say is that's probably not going to happen, but you're going to have a big emergency scare again, and the euro is going to get slammed down. And usually when the euro gets slammed down, silver gets slammed down. So we got this death cross in the S&P coming up, and I don't really think that's going to affect silver as much as some other things. I think that's going to affect the S&P, the general stock markets. And if it affects them, what's going to happen is Ben Bernanke's going to act. And if you have more of a problems in the euro, Ben Bernanke's going to act. So, I've been saying it all along for like months and months and months. QE is probably a lot closer than you think. I think it's going to be announced before the election because it's actually good for the election. If you have a problem with the S&P going down, you're definitely going to announce QE. There's no doubt about it. So This death cross, I wish I could display a chart, but it's like copyrighted and stuff. It just means that the 50-day moving average is crossed over the 200-day moving average. And usually when it does that stuff, that means that the stock markets are going to tank. It's a very good sign. So, you know, that's what we need to happen. You know, Ben Bernanke doesn't care if the silver tanks. He's not going to do QE for that. But if the stock markets tank, he's going to do QE. And if there's more problems in Europe, because Italy's actually might be, you know, be calling for an exit from the euro, there's going to be more stimulus to prop things up. So these are different angles to look at. You know, just remember that death cross on the S&P, and also Italy's actually seriously considering getting out of the euro. So very popular to get out of the euro. That's basically popular opinion in Italy too. So we'll see. We'll see. Those are other factors coming up.